Well, it's too early to say exactly how much the damage wrought in far north Queensland by Cyclone Yasi has cost, but early estimates put it around $1 billion. And the bill from Queensland's flood a couple of weeks ago looks like being about $5.5 billion. And then there's Victoria's flood, the massive hailstorm in Brisbane late last year, and New Zealand's earthquake, which knocked over Christchurch. The list of recent natural disasters in the neighbourhood makes for horrendous and expensive reading. It's going to have pretty serious implications for the way we manage and pay for risk. The Brisbane-based Suncorp Group is Australia's biggest player in the general insurance market and has had a big exposure to all the recent disasters. I spoke to its chief, Patrick Snowball, about the job ahead. Well, Patrick Snowball, it seems like the insurance industry has had to have its heads knocked together by a government minister in order to get to a point where you've got standard policies that people can understand. I mean, why has it taken so long? Why did it take Bill Shorten to achieve that this week?
Well, I think there's been a long history in Australia about policy wordings, and it's very easy for it to become the lightning sort of conductor for what's going on. But I think you'll find that the industry in 2007, 2008 actually did put a proposal forward for a standard set of wordings, which were actually declined on the basis that it would be anti-competitive. So we've been down this road before.
So why isn't that the same thing this time?
Well, I think that because people have very much gone to the focus of am I covered, am I not, and the variety of wordings, and so looking for that clarity is something that's really important to us, and if it helps to have a standard set of wordings, then we can get there. But whether you've got a standard set of wordings or not doesn't mean that an insurance company is going to offer a type of insurance.
Well, I've seen a figure of up to 60% of Queenslanders aren't covered or haven't been covered in the floods. Does that sound right to you, and is that reflective of your company's experience?
We, under the Suncorp brand, are the only company that gives automatic flood cover in Queensland. And something like 33% of all our policyholders, of the policyholders up there, because we have a large market share across the whole of Australia, are actually covered.
You have a brand that doesn't provide.
We have one brand that doesn't, but there has always been the option to take out under the Suncorp brand, or at least for the last 2 or 3 years, automatic flood cover, yes.
Well, what's the difference in premium between flood cover and no flood cover?
Well, I mean, if you're in an area that floods, very substantial.
Like what is it?
Well, it's a significant multiple. I think that's the best way I can express it.
A multiple, like?
It's a significant multiple of policy. But as I said, it's been something that we've had available for the last 3 years. It has been well taken up. Indeed, 70% of our mortgagees through the bank have actually got Suncorp policies that give them automatic flood cover. But I think the other thing to remember is that something like 90% of houses in Australia don't need riverine flood cover, in other words, flood from rivers, because they're not endangered. And if people started to offer that automatically, you'd actually be charging too much for a premium for a risk that people don't need. So it's actually quite a small percentage of the housing stock that is exposed.
And what do you think about the people, or what should be done with the people who aren't insured, who might live next door to the person who's a client of yours, who is insured? What should happen?
This is a really, really tough call. And it's one that I've experienced in the UK on several occasions. And certainly when you start to look at government support and where that should go, I mean, obviously there are hardship funds, there are ways that can mitigate some of this disaster, but it is a disaster for some people. And we've just got to look next time to make certain that either they have the flood cover or their houses are better protected. But certainly in the UK, the example was very much that it was the public sector housing, and it was the contents of the owners or the occupants where the first help went.
Oh, you've been knocking around the insurance industry for a while. Are back-to-back disasters like this good or bad for the insurance industry? In that, you know, they probably do encourage people to take out more insurance later, but obviously in the short term, you take a hit.
I think that obviously insurance is something that you work out over a long period of time, and there are times when you get these back-to-backs. I mean, we've had an earthquake, a cyclone, and 2 floods since September, taking in New Zealand into account as well. And you look at statistically and say, well, all these are 1 in 100 a year events. Well, how do they all appear at once? I think the challenge we've always got is we've got to take into consideration, is there global warming? What do we do to mitigate risk? And the insurance industry has a huge amount to contribute, not just whether we will insure or won't, but to advise particularly the governments on measures that can be taken to mitigate the risk of changing environmental circumstances.
I suppose one thing you can say for certain about North Queensland is there's going to be some cyclones.
Yes, and I think...
And also floods eventually.
Yeah. I mean, it seems to rain an awful lot in North Queensland. I think the interesting thing about it, of course, is that since 1982, with the new building regs, that a lot of the houses have been built to cyclone standard. And indeed, we had a customer from Innisfail ring us up first thing yesterday morning to say that the house that we'd rebuilt for him after Larry had no damage at all. And so I guess over a period of time you'd say that every house in Queensland, in North Queensland, is going to get that level of protection. But I think that's an example of what I call risk mitigation. And that's as important as just paying insurance premiums.
The Financial Review cited an email from Zurich this week to the effect that a number of insurers are exiting the strata market in North Queensland in particular. Are you seeing that? Is there a shrinkage of the number of people providing insurance?
Well, I think that if actually you look, we are the last insurer in Queensland, but we are a Queensland insurance company.
What do you mean the last insurer?
Well, if the people providing flood cover in northern Queensland were the only people. So, I mean, again, they always say, you know, the premiums of the many pay for the claims of the few. And we have substantial premiums across Queensland, but our exposure in Queensland is not disproportionate to the exposure we have across the whole of Australia. Some people think we have a huge concentration. Actually, we have almost the same percentage of the Queensland market for household insurance as we do the rest of Australia. We are just a very big insurer.
This article actually, we're talking about the exiting of insurance companies, also predicted that premiums would rise by at least 30% in Queensland, partly because of that and also because of, obviously, the cost of the disasters. Is that likely, do you think?
I mean, I think that people come out with all sorts of numbers early on. I mean, you often hear loss adjusters saying how many billion a claim is because that sort of encourages more people to get in. I mean, substantially, if you actually look at the exposure of reinsurers to claims in North Queensland, actually it's not that great. I mean, if you look at it compared with the earthquake in New Zealand or you look at what happened in Katrina. And the reason is that, as you're right, there are a lot of people who don't have flood insurance in Queensland, and therefore that's not being hit by reinsurers. But they're always going to be looking at risk. But I mean, the reinsurance market is a global market, and the thing that actually drives the premiums in that market is, do we have hurricanes in the United States every year? And if we don't have hurricanes in the United States, there is capacity elsewhere. But to your early point, the key thing we've got to understand is if this becomes a year-in, year-out problem, then reinsurers are not going to be looking to their premium being risk mitigation in Australia. They're going to think that it's going to have to carry a premium.
I suppose a key issue for your industry, and the reinsurers as well, is to what extent are these weather disasters related to climate change and therefore becoming more frequent.
And I think that, as I said, we almost touched on that earlier on. That's at the heart of this issue. Is the story changing, or is this a cycle? So if you look at La Nina years, there is a lot more water. El Nino is much drier. But in the middle is about 45% of the time that's neutral. Now, unfortunately, we just don't happen to have had a neutral year over the last 3 or 4 years.
And what about the strains on your business? Are you still on track for a 3% margin increase by 2012?
The underlying margin, we've said at least a 3%, yes. The answer is we are, because we're getting that out of the benefit of re-engineering the business. I mean, talking about my business, you know, I've only been in Australia 14 months, and I couldn't be more proud of the way that the Suncorp team, whether it's the bank, the insurers, have really come together. I had 100 people on the ground within 48 hours of the Brisbane floods. And we've been through about 90% of those risks already and got them on the scheme and started to fix people up. It's just fantastic the way people have rallied together. And this morning I've got people out in North Queensland as well.
So you reckon it's a pretty good insurance company?
It's a fantastic insurance company.
So what about selling the bank?
I think that we obviously never comment on market rumour. I mean, there are two things I'd point out. Firstly, we have a very clear strategy, which is we're a diverse financial service group. We meet the aspirations of Middle Australia. We can give someone motor insurance, life insurance, a deposit, a mortgage. And part of that is the bank. And the bank is travelling really well. And the key issue there is that I would point out to people that our bank has just had an upgrade in its rating to A+. It gets that A+ because it's part of an insurance, it's part of a group. Other regional banks only have BBB ratings. So that bank is travelling well, and it's well bedded into the group.
Brett Measure of BBY said this week that the obvious thing to do is for you to merge your bank with Bank of Queensland.
Everybody has their opinions.
Thanks for joining us, Patrick Snowball.
Thank you very much.